And now Dan is coming. Dan Wilton is the CEO of First Mining, and we have a nice story. I booked my flight to PDAC, and then I wanted to visit Springpole, your project. Hi, welcome.
Thank you.
But it was the beginning, late of February in 2020, so my wife said, cancel your flight. And I canceled my flight. She said, we had a new baby and we had 3 other kids, so she wouldn't be very happy to stay there maybe for months, and I will be in Canada. So I never visited Springpole, but I think we will do that at one point. Not yet. Not this winter.
We'll get there. No, absolutely.
Okay, and you will have your time. You will get your time, so please start then.
Thank you. No, I appreciate it, and I want to thank you, Tarek, and thank Kai for putting on a great presentation, or a great conference, and actually being able to meet people in person. Being able to travel. I'm reacquainting myself with jet lag today, which is something I haven't done for 2 years. So if I'm a little hazy, you'll know why. And actually, again, a little note about Kai. Kai and I had my first meeting after the beginning of the pandemic, because Kai lives a few blocks from me in North Vancouver. And we went out, actually the first in-person meeting I had after the onset of the pandemic was with Kai. So special place in my heart, and lovely to be here. So, and I've got a different presentation here on the screen than's on that screen there. So I'm hoping that, here we go, we'll catch up. Perfect. So First Mining Gold, we're a company with a portfolio of projects in Canada. The company was established by Keith Neumeyer, who's in the audience here today. Keith founded the company in 2015. And I think I love watching Ronnie's long-term presentations, because a lot of us forget what the equity markets were like in 2015 for gold developers. It was the worst time we've seen probably in the last 30 years. And Keith had the foresight to go and acquire 8 different companies or projects in about 12 months and put together this amazing portfolio of real gold resources in Canada. And that's kind of what we were blessed with to start out. In this portfolio, we have a few 100% owned assets, including our Springpole project, which is a 5 million ounce equivalent development project sitting about halfway between Red Lake and Pickle Lake in northwestern Ontario, in a highly prospective region where we've now almost doubled our mineral tenure in the last 9 months, and are starting with the intention of being able to show that the 5 million ounces at Springpole very much is the starting point of what we think is an emerging district. We've also got our Cameron project, which is located about 80 kilometers from Rainy River. Again, a 1 million ounce resource. And we have a couple of 100% owned projects in Quebec. And then in order to give ourselves the flexibility to move forward with Springpole, which we have in the environmental assessment process, we've found partners for 3 of the projects that we had. We brought in an Australian company called Oteco Minerals, who's earned into a 70% interest in our Pickle Crow project, high-grade gold. They've taken that resource from 1 million ounces to about 1.7 JORC resource. Past producing mine, great infrastructure, and they're in the middle of another 50,000 meter drill program, having drilled 45,000 meters last year. Our Hope Brook project is being moved forward by a company called Big Ridge Gold, which is spending $20 million to earn into an 80% interest. Drills starting to turn there, and this is Newfoundland. Is actually the largest past producing gold mine in Newfoundland, produced 800,000 ounces in the 1990s. And right in super prospective mineral tenure. So excited seeing that move forward. And we are the largest shareholder of Treasury Metals, which has the Goliath Gold Complex in just outside of Dryden, Ontario. And we actually distributed about 60% of our holding of Treasury directly out to our shareholders earlier this year, which again was one of the things when Keith set up First Mining Finance at the time. The intention was always to find partners and be able to return value to our shareholders. So, you know, not many developers end up doing big stock dividends, but we've done that. And, you know, all of us who are First Mining shareholders are now significantly larger shareholders of Treasury Metals as well. As we've gone through this partnership and sort of simplified our portfolio a little bit over the last year, we've also kept a royalty package, which a lot of people don't appreciate, but it's 21 royalties in 4 different countries. and a lot of those on million-ounce plus resources that companies are spending tens of millions of dollars exploring. So we think this is something we get no value for in the share price, but certainly something that is real value. So again, why First Mining? Focused on advancing Springpole. This is one of the largest undeveloped open pit projects in Canada. We actually last week received approval of our terms of reference for the environmental assessment there. So we're submitting that EA document Q1 next year and aiming for environmental assessment approvals of that project by the end of 2023. So really, in that next generation of projects, there are a bunch being built in Ontario right now. Côté, Magino, Hard Rock, all large projects in construction. When you look beyond that, in Ontario, it gets very, very thin. Springpole is going to be one of those next strategic projects to be built. I'm very excited to hear about $4,800 gold as the median of a distribution in 2030 because the Springpole NPV at $1,600 gold is about $1 billion US, and it's $150 million US increment for every $100 of increase in the gold price. So the quick math would be about a $6 billion US NPV of Springpole at $4,800 gold, which would be about $8 or $9 US a share for First Mining. So significant upside potential there. Love the prospect of $4,800 gold. We've talked about our other projects being moved forward by our partners. We'll touch on that a little bit. We don't have a lot of time today. And the royalty portfolio, but let's just talk a little bit right now, sitting today at a market cap of $210 million. But we're very well funded to get the work done that we need to do. So with these partnership deals that we've done, in addition to selling a silver stream on Springpole last year that helped bring in some longer term financing, we're sitting today with in excess of $30 million of cash, marketable securities of another between 35 and 40 million, going up every day as the gold price increases, which we're happy about. Future cash and share payments, and the value of our project interest still gives us a lot of runway to make sure that we don't need to take any more equity dilution in order to get this 5 million ounce project through to the point where you can make a construction decision, which we're excited about. Trading incredibly undervalued. Well, I will be the only CEO here that tells you that their company is undervalued, I'm sure, over the course of the next 2 days. I think we could justifiably demonstrate that. You know, you are getting, we think, $1.7 billion of asset value at a $1,600 gold price for a grand total of about $127 million of enterprise value. So lots of room for the share price to go up as we continue to take risk out of Springpole primarily and demonstrate the value of some of our other projects. So still trading at attractive values, call it $13 an ounce, when some of the peers in development process who may be a year or two ahead of us are trading at in excess of $100 an ounce. So lots of room for the runway to increase. Just a bit about Springpole, we won't dwell on it too much, but this is a tier 1 project in a tier 1 jurisdiction. We're about 100 kilometers from Red Lake, Ontario. We now have forest roads well up onto our mineral tenure. We've got power lines 40 kilometers away and a brand new 230 kV power line being built about 70 kilometers away. So unbelievable infrastructure. This is one of those unique strategic assets that the market just hasn't appreciated the value of. I think when we think about where the industry is going and a lack of investment in big projects, this is one that is going to very much attract that value. So, we've seen a number of similar projects end up being bought over the last couple of years. When you look at the valuation multiples, that usually attracts still multiples of our current share price. But this is really a unique asset. Very robust project. It's the grade's about 1 gram gold and 5 grams silver. All-in sustaining cost in our pre-feasibility study, which we put out earlier this year, sub $600 an ounce. After-tax IRR at $1,600 gold of about 30%. This is a big, robust, low-cost, large ounce producer. And as you can see, when it's built, it will be vying, certainly a top 10 gold mine in Canada, and in some of the years of its production, where it tops out about 400,000 ounces a year, this is top 5, bordering on top 3 potential gold mine. On top of that, we're sitting on the edge of this Birch-Uchi greenstone belt, which is the same arc of rocks that carries from Pickle Lake all the way over down into Red Lake. For whatever reason, the Birch-Uchi has seen maybe 1/100th of the exploration spend that the Red Lake camp has, with very similar geology. So we, in the last 9 months, have almost doubled our mineral tenure on what we think are some of the most prospective structures in this belt, including the aptly named high-grade island, which we optioned last year, which sits only a couple of kilometers from the deposit at Springpole. It's only been drilled down 200 meters. It's got an established strike length of 300 meters, intersections like 245 grams per ton gold, 30 grams over almost 10 meters. And just hasn't been drilled since the 1980s. So these types of deposits sit in this belt where there are 5 or 6 past producers, but they produced in the 1940s. So huge geologic upside, which I think we're aiming to show again, that 5 million ounces at Springpole is just the starting point. The deposit at Springpole sits under the shallow bay of a lake. Again, this is something, it's 6% of the area of this lake, 3% of the volume. This has been one of those things that people have struggled to get their minds around. The reality is, this is no different than any open pit mine in Canada. As you go to the further north, pretty much every mine has to deal with some degree of cofferdams and dewatering of lakes, because the landmass in northern Canada is greater than 50% lakes. So our VP Environment Community Relations has actually permitted Gacho Quay and as a regulator permitted Meadowbank. We did a great webinar on the environmental assessment process. If anyone has any questions, go on our website and watch that. I think you can get a real degree of comfort on the fact that we're very confident getting this project through the EA process over the next couple of years, guided partly by our team and our consulting team that has permitted almost every large open pit mine in Ontario in the last 15 years. So the timeframes, when I started in 2019 talking about construction decisions and EA approvals at the end of 2023 seemed like a long time away. It's now kind of the year after next. So we are submitting, a 10,000-page environmental assessment at the end of next year, or first quarter next year, and aiming to have EA approvals at the end of 2023, facilitating that construction decision 2024. Very squarely putting this project in a place where it will be that next generation of projects to be built after there are 3 big projects being built in Ontario right now, which we think is great timing, because while there may be some factor price inflation in this current generation of builds, we're going to have, somewhere between 3 and 5 big, hungry build teams looking for the next project, and we'll be there. Just a brief moment on the partnership portfolio. Obviously, the key takeaway here is with our 3 partners, we are going to have in excess of 125,000 meters of drilling done at our partnership assets over the next year. So lots of leverage with those investments still to discovery, moving resource. Treasury is going to have that Goliath gold complex at PFS by the middle of next year. Again, Ateco continuing to delineate high-grade gold beside a past producing mine, and Big Ridge, great exploration success right beside a past producing mine. And we'll just finish briefly with our royalty. 30 seconds. The royalty portfolio, obviously, not a lot of people appreciate that we have this, but this royalty portfolio compares pretty favorably to the portfolios of a lot of junior royalty companies, and I don't think we're getting any value for that in our share price. So with that, we'll just apologize we don't have more time to talk about more of that, but I don't know if we have time for any questions.
Yeah, we have one question.
One question.
One from the audience.
Perfect.
My question is, we all know they have big Australian neighbors in the Red Lake district.
Indeed.
Yeah, but you have also your number of shares is quite high. It reminds me on Australian companies. So will we see one day Pullback? No. Rollback?
Rollback.
Yeah.
Well, I'm not allowed to use that word. Keith would fire me if I used the word rollback. Personally, I'm not super fussed by a number of shares. I think all of our shareholders are sufficiently capable of dividing or multiplying by another number to get to a share price. What we're really focused on is the value that's in this company and the value of those assets. So, the point on the Australian neighbors is important. We're seeing a lot of consolidation in Red Lake.
Yeah.
But the other thing a lot of people don't appreciate is Barrick has just entered into an option agreement for a big land package right on the southern flank of Springpole. I think, again, this Birchuchi Greenstone Belt is starting to get some real attention, and we are, without question, the anchor tenant there. So,
okay.
Just another comment. The first company I formed, First Minerals, has 700 million shares outstanding. We're just slightly less than First Mining, and it trades at about $30 a share.
Okay, thanks. Another question from the audience? If not,
I know you could only briefly touch on your royalties at Bender. Is there anything coming down the pipeline with those royalties that they could be kicking cash back to you when you return?
Well, the main royalties that would be closest to cash flow, we actually have one on a Nordgold property in Burkina Faso, believe it or not, which, 3 years ago, it only kicks in above $1,700 gold. I think, we'll see. It's working into a mine plan over the next couple of years. And the other ones would be Treasury, which, you're looking at a construction decision probably 2023. But, we're not in a big hurry with these royalties because the main ones are getting better every day. Like when your partners are spending $30 or $40 million drilling, you kind of want to see the results of that before you start trying to figure out what those royalties are worth. And this goes right back to Keith's original strategy of, picking up quality million-ounce resources. The reality is the investment hasn't been made in this industry in the last 10 years, and we are about to hit a turning point where those resources are actually really going to be valued. So, no, we're very excited. I think we're very well placed and still represent, I think one of those huge opportunities. Our great friend and investor Claude Béger often points to, he's made a 10-bagger on Springpole twice before. He's tasked us with making this his third, and we're here to deliver for him. So there we go. Appreciate everyone's time and great to see everyone in person. We'll be around if anyone has any questions. Thank you very much.